Hey guys, and welcome back to the Maximilian channel, and in today's clip I'm going to be taking you through a super simple FX strategy that I believe can really help you pass the Ftmo challenge or the funding challenge or whatever challenge that you're looking to take. Now, for those of you that have followed me for a while know that I don't really trade FX much anymore, if at all, and I mainly focus on 3 key indices because that's where I feel I make the most money. But having spoken to a few people, I do understand that although my trade breakdowns are useful for a lot of people, some people prefer something that's a lot simpler and a lot easier to take away and digest without having to keep going through things over and over again. So that's why I decided this week I was going to take a trade on an FX pair with the strategy that I found to be useful for me, and then I'm going to do the trade breakdown and try and give you all of the nuggets that I can to try and help you replicate that to help you pass the Ftmo Funding Talent Challenge. Now, it is just approaching London Open here in the UK, so that is 8:30 local time, and today is Tuesday the 27th of July, and as you can see, I've just got my notification through saying TP hit on my Euro Australian dollar trade. I've put a little screenshot of the actual trade that was taken here, but I'm going to be detailing the strategy that I was using for this and then breaking down the trade individually and show you how I got into it, why I took it, and how it ultimately played out. As ever with these guys, I do just want to crack on straight away and run through the breakdown. If you are enjoying this clip at any point, or if you're not, just click the like button. It goes a huge way to supporting this channel and letting YouTube know that you'd like to see a little bit more. Hit subscribe if you haven't already, and make sure you've got the notifications turned on so you don't miss when I post my next video. Cool, so without further ado, let's head across to the chart and I'm going to break down this trade. Okay guys, here we are on the Euro Australian dollar chart. So essentially what I'm looking at here is on the 15 minutes, because that's where I tend to execute this strategy, either on the 15 or the 5 in most cases. So I can see, you know, if we're looking at this broadly as a rough price action, we've come from a nice uptrend, it's tapered across, and then we've gone into a downtrend. Now for me, what I'm trying to look for is levels where I feel that it can be, you know, congruent with a trend or a trend reversal. So here, we can see that we've got this sort of bottomed out area. Yes, there was this wick, but there was also a huge wick at the top. And quite obviously that's out of character in terms of the size of the wick. So I'm going to ignore that on this occasion because I don't feel that it's indicative of the main piece of price action. So yes, it could catch me out, but I'm willing to allow it because I can see that this was really the bottom level, in which case this has been taken out. So once this came down from this downtrend here, this low wasn't ever taken out again, other than this anomaly wick, and then we've retraced back up and sort of come and sort of hovered around this area. So for me, what I'm really looking for is this being essentially the most recent high of this up price action, and what I'll be looking for is for the price to come through here and then retest around this level and then sort of come back up. Now, I don't necessarily target a full retracement and a full recovery to the point that it was at, but we'll look at, you know, how the position played out overall. Now, if I start moving along the chart, we can see that we get sort of another hit on this level, which to me sort of has solidified the importance of this zone, if you like. I've taken it from these points just because that's the area of resistance and also sort of a broad candle range within it as well. And here we can see sort of another reaction in and around this level here. So for me, this seems like a very important level to break. If it doesn't and it just tanks, of course, this position is off for me. You know, I'd maybe be looking at it breaking this level and then retesting here and coming back down. But it's still on as far as I'm concerned. And then finally we get this break. Right now we get this break where it sort of rests above this level. So to me, this is interesting, but I want to see sort of a clear break that can be, you know, well defined. And as we see, as the price keeps moving out, we get a really, really clear defined break out of this position. Now what I'm looking for is when we get to sort of a peak and we start drawing back, which is around here. Now what I'm looking for is to see if I can get the fib lines to match up. So I'll take it from the bottom of that you know, bullish move as to where it was going from. And if I come across here, I can see that the 38.20 level lines up with the area of consolidation here. But if I'm looking left, there isn't really much else that I can really take from that. So the 38.20 isn't really that important to me. The line that I'd be looking for is the 61.80 because this does match up, not at the top of the zone, but sort of at the bottom of the zone as to where this level was created. So that's where at this point I'd be looking to essentially you know, plot in here, which is where I had my position in, which is obviously where you saw from my screenshot on the entry and whatnot. And what I'd be looking for is for the price to come down here, to tag me in on the 61.80 line and come back and then retrace. Now I've got my TP here instead of here, purely because, you know, I can see that yes, this is a level where I would probably look to get to at a best case scenario, and then this is sort of the other level of wicks and price action that I can see, because that sort of, can't get that straight, that coincides with the consolidation around here as well. So that's really why I'm looking at this, because I feel that this is a safer play. My stop losses are based off of looking at when it made that bullish move through, like broadly where the wicks came down to. So I'm looking at around this point. To be slightly more aggressive, because I do feel that I'm at the bottom of the range where the 6180 lines up, and I'm slightly beneath the 6180 range. So I'm hoping that I would get in at a better point in this position. So let's just see how things play out. Price is coming down nicely. It gets tagged in here just below the 6180 line, and then we start pushing off. Now, the one mistake I did make was that I took this in the evening, sort of the UK time evening, which is obviously, so the euro and the Australian dollar are both not really in play. It's mainly just US at that point. So I was prepared to hold it overnight, because, you know, it was pretty much a you know, like a stagnant pair until sort of 8ish this morning when Germany opens, and obviously would have had the Australian and the Asian session before it as well. So as you can see, during the US session, it was pretty flat. I wasn't really bothered about this, and held overnight. And then as the Asian session kicked in, price started shooting a little bit higher, and then the Euro session kicked in, and then we got taken out for take profit. So that was a nice 4.7 hour trade. Pretty straightforward. Didn't take too long overall. If we take it from the area of entry to the point of TP being hit, which is around there, we're talking about 17 hours overall. But essentially the parameters that I'm looking at is for here, where the trend had changed. It then moved into an uptrend. The break of this level here would have confirmed that uptrend, and I'm looking for a retest of this zone where the fib level, either 3820 or 6180, matches up. Ideally the 6180, because it shows more of a deeper retracement, and I want to see sort of how relevant the price action is around that level as to when I take it. The 3820 didn't have enough there, whereas this was a proven level of resistance that it had broken through, so this was going to be a better chance for me. My take profit was more conservative, because if I targeted towards the top, I worried that I wouldn't have quite got tagged in and I could have missed out on profit. So I take it on a more conservative basis around recent price action where I feel would make the most sense. So I'm not trying to squeeze every amount. In and out, 17 hours, and that was the trade. Hey guys, I hope you got some value from this breakdown and understanding of the strategy, and it is something that maybe you can take away and try and apply for yourself. If you've got any comments, queries, questions, abuse, as always, stick it in the comment section below. If not, have a cracking week. I'll catch you on the next video. Take it easy.